Supply or demand is a zone where price rapidly pushes away, creating inefficiency and a break of structure or change of character. There are three factors to consider when identifying supply and demand areas for trading. Did it create inefficiency? Did it break the structure or change the character? Did it create liquidity before the zone? So what is the inefficiency? Inefficiency occurs when we have gaps between the candles, and when it happens, price is more likely to come back to this area to fill the gap. What are break of structure and change of character? A break of structure is formed in a trend continuation. Every time price breaks a structure level in the same trend direction, it signals a trend continuation. On the contrary, when price breaks a structure level in the opposite direction, we call that a change of character, which signals a possible trend change. Change of character supply and demand zones are most effective when they break through two or more supply and demand zones. Change of character forms after a higher time frame mitigation. Price impulsively breaks through the zones with a few large candles. What is liquidity? If smart money wants to buy a large number of currency pairs, they will need sellers in the market. The existing conditions to place these positions are called liquidity. So imagine that we are in an uptrend, and if banks want to buy this currency, logically, they need many sellers. But since we are in an uptrend, everyone is looking to buy. So let's suppose that price makes support before reaching the demand zone. So this support will be an interesting area to place buy orders for support and resistance traders. And guess what type of orders are their stop losses? Sell orders. Now, smart money can grab the sells and place their buying positions. Here are some important points about liquidity. Liquidity zones are further confirmations to execute a perfect trade when formed above or below a trading zone. There are many types of liquidity, but we mainly pay attention to equal highs and lows. Stop losses define liquidity. Where the stops exist, the liquidity also exists. So, next topic we have order blocks. Order blocks are optimized supply and demand zones. We consider the last recent candle that created the inefficiency as an order block zone regardless of being bearish or bullish. But we have three rules for a valid order block. First, it must have inefficiency. Second, it should lead to a break of structure or a change of character. Third, it must be unmitigated. Unmitigated means that it has not been tested by the price yet. Since order blocks are one-time use, we don't consider trading mitigated order blocks. Here is an important point. In two conditions, we use wicks as order blocks. First, when the shadow of the order block candle is bigger than the rest of the candle. Second, when the shadow of the following candle grabs the orders. The next topic is the market structure. Supply or demand, who is in control? Imagine this is a 1-hour structure, and the price reaches a demand zone. So, it would be wise to look for buying opportunities. But what if the price came from an unmitigated 4-hour supply zone? So, you want to trade the controlling side of the market. Let's suppose you're waiting for a demanding trade to go long, but the price comes from an unmitigated supply zone. In that case, supply is in control, and you can't trade demand without confirmation. Always check where the price came from. In two scenarios, you can use a risk entry. First, the price broke through the supply level, giving us a bullish higher timeframe bias. Second, the price broke the structure but have not reached the unmitigated supply zone yet. Now let's have an example to explain how to establish which side is in control. Look at this example. Imagine this is 4-hour structure, and we can clearly see that we are in a downtrend, so supply is in control. Although we have a short-term uptrend, as long as we stay below the 4-hour supply zone, we have a bearish bias. But if we break the major 4-hour supply zone, we can establish the demand took control. And as long as we stay above the major demand zones, we have a bullish bias. But if we break the demand zone to the downside, we can establish uptrend is over and supply takes control. Now that you understand the concepts of a smart money trading system, it is time to